Good morning. We are back. We took a long break, but we are back. So let me share the screen. So let me share in the various groups too as well. All right. Good morning. Good morning, everyone. Let me share my screen. I hope you're all doing well. It's been a while, though. It's been a while. So recently, we were doing it consistently, and I decided let's do it. Like, let's schedule some time. You shouldn't be making the life every day. I hope you people can hear me as well. Can you hear me? Can you hear me? So I decided to schedule sometimes, at least within the week. It should be twice within once or twice within a week. That would be cool. By doing it every day, sometimes kind of yeah. So you're all welcome once again. I think brand new week. So let's start. Let's start. So where are you listening from? Let me know where you are listening. I think the music is loud. I think the music is loud. Is it okay for now? So where are you listening from? So you type in your name and where you are listening from. So as usual, what you have to do when you join the stream is what you just click on the thumbs up button. The thumbs up button. Click, give a like, and if you have not subscribed to the channel, to kindly subscribe to the channel. So today I have a good value. How should I even put it? I have a good. Mm, I have something informative for you people. So about trading. So maybe I will show you how you can scalp go to as well. So kindly click a like, give a like to the stream, and you have not give a like to the stream. So you click on the thumb. So you are more than four. Only four people have given a like to the stream. You are more than four. Give a like to the stream. We are more than four. So we having let me mention names. Adon Wisdom from Medina. We having Chendu Isaac from Nigeria. Chendu. We having I'm right. I'm Ein from Kenya. So where are you listening from? 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 Let's start. Where are you listening from? So we're having Vincent Annan from Tema. Vincent, you are welcome. You people are more than that. Where are you listening from? Let me know where my audience are coming from, so that we start the agenda for the day, for the session rather. So so Danny, we all know you are from GH. Which part of GH specifically? So we're having Blacklist Charlie from Ghana. We're having Richard Anyimansa. Wow, good morning from Ghana. We're having Regina from Kenya. All right. So if you join the stream, what you have to do is just click on the thumbs up button. So click on the thumbs up button, give a like to the stream, give a like to the stream, give a like to the stream. Click on the thumbs up button. Click on the thumbs up button. Let's start this already. Yeah, it's already time. It's time already. Charles from Takrady. Charles Owupele from Takrady. Charles, you are welcome. It's time already. So you guys should give a like to the stream so that we start. So how many people? Let me check how many people have given. So 12 people have given a like. So let's get it to 15 so that we start. We are left with 3 more. Let's move it to 15 so that we start. Give a like to the stream. Give a like to the stream so that we start for the agenda for the day. Give a like to the stream. All right, so okay, so you guys are all from Africa. So Jora from South Africa. All right, so all my audience are coming from South Africa. All my audience are coming from Africa. We don't have some from America. You don't have some from Europe. You people are coming from Africa. That's fine. So you can relate well with me. I'm also from Africa, Ghana to be precise. So I think so. I'm Pakwesi from Ghana. I'm your host for today's section. Okay, I'm going to be your host for the lending session today. So this is what you are going to be doing. So those who are new over here, this is what you are going to be doing. We are going to be breaking down. We are going to be talking about. You check the fundamental aspects. We are going to be breaking down chart 2 as well. There will be time for question and answer session 2 as well. And I will give 1 or 2 advice on how you can also become a successful Forex trader, how you can be able to trade profitably. And I know a lot of you are beginners too as well. So let's start the agenda for the day. All right, so let's check out the fundamentals. So this is the first thing you need to do as a beginner trader, as even not a beginner trader. Anytime you want to input a trade when it comes to forex. So forex is basically about what? Trading of currencies. So if we're about to trade currencies, okay? If we're about to trade currency, in case maybe you've seen a currency pair, okay? As you know, currencies are not traded alone. We trade them in pairs. So in case maybe you have seen a currency pair, on how it is going to, reading the chart of the currency pair, and you notice, oh, maybe the currency pair is going to what? Is going to, the chart is going to move up, or the chart is going to move bearish. This is what you have to do first. You need to check the fundamental. One thing you need to always have it in mind is what? Currencies are surrounded, currencies are moved, currencies are mostly influenced by a country, or an economy. You get it? So the first thing you need to do anytime you want to take a trade, anytime you are analyzing, is to check the fundamental aspect first. Okay, a lot of people are not aware about this thing. You need to check the fundamental aspect first. If maybe they'll state, if you have not input a trade first, if you have not taken a trade, the first thing you need to do is to check the fundamentals. If you are having a red folder, so you are seeing different folders over here. You're having orange folder, you're having yellow folder, you're having gray or white folder, you're having red folder over here. So what you need to do anytime you want to analyze a chart, anytime you want to trade, the first thing you need to do is to check the economic calendar. If you see a red folder, okay, and you check the time, and you notice that the time, you are seeing a right setup, but the time is approaching, you don't have to execute. If you see a red folder, my advice, even though mostly or most of the times what it happens is what fundamentals mostly what aligns with technical analysis. If you analyze rightly, or if you analyze correctly, mostly fundamentals what aligns with technical analysis. You get it? But it is advisable you avoid it. The reason is what? When it comes to fundamentals, during the release of the news, the market becomes very volatile. You get it? There was rapid movement in price then. So you don't know the market. So I think last what do you call it? Last NFP. This is what happened. Let's check the last NFP. Was it this one? With the last NFP, the market was very chaos. There was chaos in the market. See what happened. I think, let me check gold and see. Let me check the chart for gold. Yeah. So this is the candle. This is the NFP candle. So mostly when there was a high impact news, you see what happened? The candle moved up. So imagine maybe, so anytime you place a trade, you mostly place a stop loss. So in case maybe you enter the trade and you enter the sell, you place your stop loss around this side, the market is just going to stop you out and just move in your favor. In case maybe you enter the sell and you place your stop loss over here, the market will just take you out and it will move in your favor. So these are some of the things that happens. These are some of the things that it happens when the high impact news is being released. So the most important thing, as I'll always recommend, is when maybe an hour or 30 minutes before the high impact news, the best thing you have to do as a trader, if you want to see consistency or if you want to trade profitably, the best thing you need to do is avoid trading during those times. Kindly hold your balls, kindly be patient, kindly stay calm. Okay, kindly stay calm. Let the news pass by before you even execute. No matter how the market is looking enticing, no matter how the market is looking desiring for you to trade, the best way to go by is, I will advise you to avoid. And one thing to, aside even the whipsaw, aside the market moving up and down, mostly what happens to is spread widens. Okay, spread widens. So maybe if when I say spread widens, maybe if you decided to execute a trade over here, maybe you've placed your pending orders, you've placed your sell stop over here. Okay, you've placed your sell stop over here, and the market is around this side. Since or because the spread is very wide, because the spread has increased, when the market is even around this side, spread can trigger you in. Okay, but one thing you need to understand is what, if you are using standard account, or if you are trading and you are using standard account, mostly the spread is kind of wide. So what happens is what, if the market can take you in to the trade, okay, whilst the market hasn't gotten into the price that you intended to what, sell. So this is another what disadvantage of trading or being in a trade during a high impact news. The market can just trigger you in, and what, it will later move in your favor. It will later move maybe against you, whilst the price that you intended, or the price that you were willing to sell, hasn't gotten there yet. The market can just trigger you in, and it will just move against you. You get it? So these are some of the nuances when you are trading what, news. So it is very, very important you avoid during those times. And when it comes to news events, when you are trading, in case maybe the market even went in your favor, there was not, as in, the market doesn't move in one direction for long. Okay, maybe your take profit is at this point. Since there was high impact news, there was as in, there was war among the buyers and sellers. Everyone wants to what, dominate the market. Everyone, all the participants want to dominate the market. Buyers want to dominate, sellers want to dominate. So the competition is very intense during high impact news. So when it happens like that, the market will move very what, it will move for some time, a very short time, and what will happen is what, versus some of the disadvantage of when there was a high impact news about to approach. Okay, when there was something like this about to approach, these are some of the things that mostly happens in the market. There was no stability, there was no, as in, there was no smooth move in prices or the candles. You get it? So when it happens like that, one thing I would advise you to be doing is what, just stay. It is very important, unless maybe you are having a separate account to trade the news. If you have a separate account for news, purposely for news, that is fine. I can't tell you to stop. But if you have an account, maybe you are trading a pro firm account, a proprietary firm account, or you're having an investor's account that you are trading, okay, one thing I would advise you, don't gamble when there was a news hours, because during that time the market there was chaos in the market. The market doesn't move in, there was no smooth movement in price. So if you are not careful, you are going to end up what, losing your account. If you are not setting stop loss, okay, you are going to end up losing your account. Then you have something called slippage. Okay, the market is going to slip. Maybe you are taking a sell. Okay, you are taking a sell and you intended to what, sell at this point. This is the price you intended to sell, because the market is since price is moving very fast, the price that you intended to buy is going to be slipped. So instead of the market to trigger you in at this price, okay, instead of them to trigger you in at this price, this is the price that you, so this is the market, what do you call it, this is the price you intended to buy. Okay, let's see, how should I even put it, let's say either sell at this point. So maybe you intended to sell at this price level. You intended to sell at this price level, but because the market is moving very fast, what will happen is what, your order is not going to be triggered in at this current price. You are going to either be taken in at this price. Okay, you intended to sell at this price, but because the market is moving very fast, this is the level, this is the price they gave it to you. You get it? So this one, if you enter over here, maybe it might be approaching your stop loss. Okay, sorry, it might be approaching where you wanted to what, exit from the market. So when it happens like that, mostly you are going to what, the market is going to what, going to reverse against you very fast. Okay, so some of the things, these are the some of the things that normally happens if you are trading during high impact news. So these are the things, so kindly consider. Okay, so avoid when there was a red folder, don't trade them. Especially we have some red folders that they are very impactful when it comes to CPI, when it comes to retail sales, when it comes to interest rate release, like the FOMC and those stuffs. Okay, it's mostly what the market mostly moves very fast, so consider that and don't trade. So let's check out. So today, let's see if you are going to be having any red folder. So this is, today's date is Monday, February 10th. So the lending session, the lending session is going to commence in an hour time. So you are in pre-lending session. So we don't have any high impact news for now. You get it? We don't have any high impact news for now. So let's check out the technical analysis and see. So today we are going to be analyzing all the major pairs. Okay, you're going to be analyzing all the major pairs. So let's start from gold USD. Okay, let's start from gold USD and see what happened. So since Trump, I don't know, since Trump came on power, gold has just been moving up. The dollar has become very weak since Trump came on power. I don't know what's going on in the US. I don't know what Trump's administration is doing about this. So it has been, so if the dollar is very weak, what will happen to the stock market too as well? So let me check US30 and see what's happening too over there. So the stock market US32 is also moving up. So yeah, so when the dollar is very weak, the stock market too also normally appreciate. It's appreciating value. So let's check out on gold. Let's first of all analyze gold and see. So I'll show you how mostly you can scalp gold too as well. So looking at the monthly time frame, if you want to scalp gold, it's very simple. If you want to maybe get a short move on gold, it's very, very simple. So this is why we mostly analyze. So you have to first of all identify the various levels. Okay, the levels that price can get rejected. So you having Nicholas, good morning Nicholas. You having watching live from, you having Amos from London. You are welcome, Amos. So you are new here. All right, you are welcome. So you're having Alex from Kenya. You are all welcome. You are all welcome. So let's check out on gold USD. So you have to first of all, let me split out my strategy. So my trading plan. Okay, so with my trading plan, so if you're a trader and you don't have a trading plan, then you are just how should I even put it? You are a gambler. You are just doing a guessing game. So you have to have a game plan for trading. If you don't have a game plan for trading, then you are just doing a guessing game. Okay, you are just guessing based on your emotions or your feeling, your intuition. You are just guessing, oh, okay, where price is now moving high, price has now gotten high, so I feel like it's going to reverse. Then you take a sell. When it happens like that, sometimes you can get a beginner's luck, sometimes you might be fortunate and price will be going in your favor, but majority of the times you can't build your portfolio or you can't build an account based on feelings, based on, you don't understand risk management, you don't have any strategy on how you tackle the market. So every successful trader, every profitable trader is having a way to tackle the market. So yesterday I was having a private session with my mentorship group, and I was telling them, when it comes to trading, it is a battle you are always going. It's a war you always go. So if you are going for a war and you don't have a strategy, you don't have a plan on how you are going to beat your enemies, then how can you conquer your enemies? There's no way you can conquer your enemies. So if you have been reading books on the ancient empires, on how they normally conquer nations and those stuffs, you will notice that all those nations, all those conquerors, or like all those people who conquer, all those nations who normally conquers other nations, they are having a plan. Okay, they are having a plan on how they normally go by things. So it's the same thing in trading. You are going for war. When you are trading, you are going for a war. So you need to have a plan on how you are going to tackle this market, on how you are going to beat this market. Okay, have a plan, have a routine when it comes to trading. Okay, when it comes to trading, you need to have a routine so that you can be able to conquer. So sometimes the market, so it's the same thing. If you go, so those who go for war, sometimes some of the this thing, how should I, some of the those fighters, sometimes some of the empire, some of the fighters normally what do you call it, some of the fighters normally dies. You have some people that they die, but at the end of the fight, maybe they are going to win. You win doesn't mean you are not going to have some people who are going to die, or you are not going to be having some people who are going to be injured. By all means, you are going to be having some people who are going to die, you are going to have some people who are going to injured, but at the end of the day they are going to win. So it's the same thing in trading. Having a trading plan doesn't mean you are not going to lose a trade. There's no way, at certain points you are going to be losing some trades. Okay, but if you're having a plan, your wins are always going to be what, bigger than your losses. That's how it goes in trading. So you need to have a plan, a lay down plan, okay, a strict plan, and you are going to follow those plan what, religiously. Okay, you see how those if you are a religious person over here, you see how mostly we defend our religion. Those who are religious over here, we that I don't know, we see how mostly we defend. So you need to follow your trading plan like a religion, how you normally defend your religion, how you normally defend your church, your any, like anything that you belongs to, how you normally defend it is the same thing. You need to follow your trading plan religiously, very disciplined. You get it, before you can be successful in trading. Your risk management, if you don't know how to, if you are inputting a trade and you don't know the exact amount you are risking per trade, it becomes very difficult for you to succeed in this game. Okay, so have a strict rules guiding every single thing that you are doing in this niche or in this industry or in the game of trading. Okay, so trading plan. So with my trading plan, I have my strategy. Okay, you need to have a strategy. So your strategy must include your entry and your what, exit plan. How are you going to close trade? You need to have rules for all these things. Okay, so when it comes to my trading strategy, I'm a trend trader. So if the market is mostly consolidating, it becomes very hard for me to what, get a trade. I follow the trend. That's how I trade. I'm a pro trend trader. Okay, be using various time frames, using multiple time frames for my analysis. I'm a trend trader. So if the market is moving up, okay, if the overall market is an uptrend, I buy. If the overall market is a downtrend, I sell. That's basically what I do every day when I come to the market. I'm a trend trader. Okay, so mostly I do multiple time frame analysis by what, doing top, analyzing from the top to what, to down. Okay, analyzing from the top to down. This is what basically I do. I do top down analysis. I do multiple time frame analysis. Okay, so multiple time frame analysis basically means what, analyzing from different time frames. So I analyze from different time frames to get my view, or to get a bias. Okay, to conclude on the decision I'm going to be taking in the market. Okay, so top down analysis. So the various time frames that I consider, mostly when it comes to maybe I have to identify my various levels and other stuff. When it comes to deciding on my directional bias, basically I use the daily time frame and the H4 time frame. So since I'm a day trader, I have to consider the daily time frame, that the trend. Okay, and since I'm trading a specific session, maybe the London session, the New York session, I have to check the sectional time frame to like the H4 time frame. I have to consider the sectional time frame because I start trading around 7 o'clock, the pre-lending session. So that's when the H4 candle has closed. So that's the time basically I start doing my analysis. So the H4 time frame. So these are the time frames that I decide on what my directional bias. So you see my lay down rules. Nothing is random over here. I don't do random things by doing a guessing game. Everything we have laid down rules. Everything is planned. Okay, so this is what I use to determine my directional. I used to determine my directional bias. Okay, so the directional bias is for me to determine if I'm going to buy or if I'm going to take a sell. This is basically what I do. So after that, after deciding on my directional bias, I plot or what I plot the various rejectional levels. Okay, I plot the various rejectional levels that price can what get rejected, levels that the candles can get rejected. I plot them down. Okay, so the rejectional levels, so the rejectional levels or the key levels. All right, so these are some of the things that I consider. So let's put them into what, let's put them into practice and see how it goes, or how I normally use them in what real in life market. So first of all, identify the various levels by what. So before you identify the various levels, you need to look left and see if you're having data to your left. So looking at things, you don't have any data to my left. Okay, you don't have any data to my left. So looking at the going to the monthly time frame, we're having this rejectional levels over here. So mostly I change the colors for me to be able to get it easily when I move to the other time frames too. Okay, I change the colors for me to for it to be very easy for me, in case maybe I've moved from the monthly time frame, because when it comes to the current market price, is the same in all the time frames that you are going to move to. It doesn't change. The current price is the same everywhere that you are going to go. Okay, so this is the monthly time frame, this is the rejectional level. So moving to the weekly time frame, so as I said, you need to check left. Okay, anytime you are reading the market, this is how it moves. It moves like this, you check left. If it moves like this, you check left. Okay, because anytime price is moving, it is going to be very sensitive to what is going on, the data going on to your left. Okay, price is going to react, it's moving. That's what it's mostly happens. So you need to pay attention to all those levels too as well. So look left. So it's like you crossing a road. Anytime you are crossing a road, what do you have to look, what you have to mostly do, you look left, you look right. So what's rejectional levels, the support and resistances, is similar to crossing a road. You need to look left and see if there's what a rejectional level to your left. Okay, the same thing as in if you are crossing a road, you check if there was something to your left. Okay, so you're analyzing gold, so you can just open your gold chart and what you follow as I'm analyzing. So moving to the daily time frame, we are done with the weekly time frame. So these are the various, so level that price is going to get rejected to. So moving to the daily time frame, when you move to the daily time frame, if price moves up, and it is coming, mostly anytime price will break, I said it's mostly, please take note, not every time, it's mostly reverses, or it mostly pulls back. It normally happens in the market, it mostly pulls back, and then what, it will continue as it follows. So that's what it's mostly happens. So we have to first of all what indicate that level. Okay, you have to indicate that level. So anytime price will get to that level, that is where we are going to what pull the trigger. That is where we are going to what execute. Okay, you are going to be thinking of buy or sell at that moment. So anytime price will get to this level, as price has broken out from the zone, it is going to get rejected. So if you watch the previous candle, you notice that the previous candle tried to break the zone, and what happened, it got rejected. So the rejection is what, the body of the candle got rejected over here. So you can see the body of the candle has closed below the level. If you can see it over here, you will notice that the body of the candle has closed below the level. Okay, so normally when it comes to conclusion, deciding on whether a candle has broken or the candle hasn't broken, we don't consider the wick. The wick is not what we use in what determine if a candle has broken or not. We use the body of the candle. So you notice that the body of the candle has closed below the level. You get it? The body of the candle has closed below the level. By the current candle is trying to break. And one thing you need to understand too is what this candle hasn't closed, so it still hasn't broken that level. You get it? The candle hasn't closed. This is a candle that is in session, an ongoing candle. It hasn't broken that level. So one thing you need to understand is what if you are making a conclusion on if the candle has broken above or it hasn't broken above, it hasn't broken above. Okay, it has broken, but it hasn't closed above. Okay, mostly when it comes to making a conclusion and when it comes to making a justification, we normally use the closure of the candle, not the wick of the candle. We use the closure of the candle to make our decision. Okay, so if you watch this candle, it is just an ongoing candle. So if you are concluding the body of the candle hasn't closed above, so we can't justify that it's maybe it's, even though it's an uptrend, but the candle has closed above. So let's move to the H4 time frame. So this is the time frame that we mostly makes our decision, or we mostly make our bias. Okay, this is the time frame that I mostly base on the daily time frame. So you notice over here that the market is clearly what trending up over here. You get it? The market is trending up over here. So you notice there was higher high. Okay, so this is the first point the market broke the structure. So the market broke structure over here. It made it made higher low, higher, it made higher low, it made high over here, it made high lower low over here. So the moment the candle has broken this one, the trend shifted towards a downtrend. So at this point the market, when it comes to this side, when it comes to this side, the market is what? A downtrend. Okay, so the point the market is going to shift trend is when it has broken above this one. When the market breaks above this one, okay, because the rule for a downtrend to shift to an uptrend is what? It should make lower low and breaks the immediate what? Lower high. So this point, the moment this one made lower low, this point, this area has become what? This area has become what? Lower high. Okay, so if the trend is shifting, the trend should break this one. So let's see how it goes. So it's still what? So this one is still what? A downtrend. It hasn't broken this level yet. So it's still a downtrend. It's still a downtrend. You get it? So the moment it breaks the body of the candle, so you notice over here that the body of the candle has now broken above this one. So the moment the body of the candle broke above this one, the trend shifted to an uptrend. So this is the point, or this is the area, okay, or this is the time that we consider gold to be an uptrend. So an uptrend means what? The market is what? Moving up. It is making more of what? Higher highs and higher lows. So the moment it broke above over here, the trend shifted to what? An uptrend. You get it? The trend shifted to what? An uptrend. So the trend shifted to what? An uptrend over here. So it continued higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Okay, at this point the market shifted trend to what? An uptrend. Okay, so we had a pullback over here. Okay, you had a pullback over here and price broke above. So at this point the market is what? An uptrend. So when you notice something like this is what you have to go based on the time frame you are making your bias, or based on the time frame you mostly make your conclusion or make your justification. When you see something of this sort, when you see a market condition like this, you need to go in for a buy, not a sell. Okay, you need to go in for a buy, not a sell. So the daily time frame at this point is what? An uptrend. Okay, that means the market is making more of, the market is buying. So the daily time frame is what? An uptrend at this point. Okay, the daily time frame is an uptrend at this point. So looking at the H4 time frame too as well, with the H4 time frame, what's the trend saying at the H4 time frame? Looking at the H4 time frame, so you need to understand how to read price. If you are trading the market and you don't understand how to read price, that's the most important thing. So if you are starting out in trading, the best thing I would tell you is what you need to prioritize: how to read price. It is very, very necessary. You need to prioritize how to read price. If you can read candles, if you can read price, okay, everything becomes secondary. The market, you are going to predict the market like magic. Okay, if you understand this principle of how to, if you understand market structure, because market structure normally helps you to what read price. Market structure is what is going to help you to read the candles. Okay, okay, so this one is what an uptrend at this point. So the market, the H4 time frame too is what an uptrend. You get it? The H4 time frame too is an uptrend. Price is making more of higher highs, higher lows. Okay, this point price tends towards a downtrend. It's moving higher point is what a downtrend. Okay, this point became what a downtrend. So last week, for instance, I saw a sell on gold, and I even, there was a sell on gold. We are not going to go there. That was last week. This trend, the moment this one shifted the trend to a downtrend, it was showing, it gives a sell signal. Okay, it gives a sell signal. That was last week Friday or so. Was it before the during I think Thursday, when there was the pound interest rate release. So at this point, price was consolidating, still making lower lows and lows. The moment this one broke over here, now the trend has shifted to what? An uptrend at this point. Okay, so now the H4 time frame currently is an uptrend. H4 time frame on gold is an uptrend. So the one thing you need to understand is what price is currently very high. Okay, price is currently very high, so you don't have to be at the middle of the range and you just execute. And it depends. If you are mostly, anytime you are executing a trade, one thing you need to understand is you need to ask yourself this question: this trade that you are taking, when it comes to placing of stop loss, is it at a safer side? And when it comes to relying, you need to get a level that you are going to what be executing on. And when it comes to relying on levels to execute a trade, you need to ask yourself, is this level that you are relying on, is it strong enough? Okay, is it stronger enough for price to get rejected on? Okay, if and one thing you need to understand again is what the lower the time frames, the lower the chances of the higher the chances of price breaking. If the time frame, you move to lower time frame, you are relying on lower time frame levels, like lower time frame pullbacks, especially when it comes to like the 15-minute time frame and those styles. One thing you need to understand about the market is what it can easily get broken. Those levels, maybe relying on those levels to place your stop loss, can easily be broken. Okay, it can easily get invalidated. These levels can easily get invalidated. What I'm trying to tell you is what if you place your stop loss below these levels, price can easily get rejected. Price can reject these levels very easily. Price can reject this level very easy. It will get your stop loss, it will hit your stop loss, it will move in your favor. So one thing I will recommend is what anytime you are taking a trade, make sure you are taking it on what stronger levels. So now price is far from what the level. Let's look left and see. This is the current market price. So if you are looking left, okay, if you are looking left, check this side and see if there was what anywhere price is going to what pull back on. So what is going on at the other side of the chart? So you notice that there was nothing going on at the other side of the chart. Okay, there was nothing going on. So what is going to happen? What is going to happen at this point? Price is very high, and for you to determine if price is very high or is very low, what you will do is what you are going to measure, you measure it based on the level price has broken out from. So looking at where the price is currently, where this level is, looking at where this level is and where price is currently at, it is far from what the level, okay, around 122 pips, which is far from this level. So one thing I will advise you to be doing, in case maybe you want to trade gold, is what, wait for a pullback over here, wait for price to pull back on this strong levels, okay, then you execute a buy. Okay, so maybe you are focusing on the H4 time frame, either on this level. It's still, when it's one thing, you need to looking for what, a buy, or unless maybe we get a pullback and price create a support at the H4 time frame or at the daily time frame or any of the higher time frames. Based on the higher time frame, based on the time frame you consider to be a higher time frame, then what, then you execute. Okay, so something like this, then you execute. Okay, so maybe you are going to be getting a level around the side, you are going to be getting a level around the side, and you execute a buy. Okay, so that's the best advice I will give everyone over here. Wait for price to pull back. If price pulls back, then what, you execute a buy, either when it makes a support over here or when it comes to this original support over here, without creating one over here. When price gets to this side, then you take a buy, then what, it moves up. Okay, then you take a buy, then it moves up. So this is the best way I think you can go. But when it comes to, if you are trying to scalp gold, okay, if you want to scalp gold, you need to first of all what, identify a time frame you are going to. So you need to get a reliable time frame, or a focused time frame. So let's say maybe you are focusing on the H4 direction, so you need to first of all understand how to read price. If you understand how to read price and you read price and you notice that the market is currently an uptrend at the H4 time frame, it is very simple, move to the lower time frame. So use the H4 time frame as your directional bias. Okay, use your H4 time frame as your directional bias. So if you read price and it is an uptrend, so what you are going to be doing is what, you move to the lower time frames. Okay, you move to the lower time frames like the H1 time frame. If you come to the H1 time frame, sorry, move to the H4 time frame and use prices. So let's say price is currently an uptrend. So what I would do is what, I just have to wait for price to pull back on this level, move to the lower time frames, wait for a shift in structure. Okay, wait for a shift in structure, then I will take a buy. It's very simple. So I don't like buying on these levels. I don't love relying on this lower time frames level. So I think this level is also strong because price is getting rejected multiple times on the H1 time frame. So you can consider this level too as well. Okay, you can consider this level because price has gotten rejected several times over here. Okay, you can see one rejection. If price is pulling back, we can see one rejectional level, another rejectional level. So the chances that one thing I would say is what, maybe you can consider, if price pulls back on this level, you can look for a shift in trend at either the 30-minute time frame or the at M15 time frame. So the shift in trend that I'm talking about is what, if price pulls back, if you are not fortunate, there will be a shift in structure within the pullback over here. So price can, so when price makes high and comes down and break this one, it has shifted to what, a downtrend. So what will happen is what, at this point the 15-minute or the 30-minute time frame is what, a downtrend. So it can make lower lows and lower highs, lower lows and lower high. Okay, so since the higher time frame is an uptrend, since the higher time frame is buying, you need to wait for a shift in trend. Okay, so something like this, the moment it breaks this one, we have gotten a shift in trend. Okay, so if it breaks this one, what you do is what, there was a breakout over here, so you wait for price to get discounted. If it get discounted either on this level or any of these levels, then you what, execute a buy. Okay, so when you execute a buy over here, you will notice that it is in the same direction with what, the H4 time frame. Okay, by H4 time frame was just making a pullback. You understand? So that's how you mostly scalp. So find a time frame that you are focusing on as your focus time frame, then you scalp it, you move to the lower time frame. Anytime price, the time frame shift trend towards the time frame you are focusing on or the directional time frame, then you execute. It's very simple. Okay, it's very simple. So that's how you are going to go back. But at this point, we can't take a buy on gold, even though the directional bias, all the time frames are pointing up. Okay, since so anytime you see all the time frame pointing up, the best advice I would give is what you need to what wait for. Don't sell, even though we are all aware price is going to what pull back over here. Price is going to pull back, but it is not advisable to sell. Okay, you are going against the trend. And the reason why it is not advisable to go against the trend is what, when it comes to correction, when it comes to the market pulling back, you don't know exactly where the trend is going to end. Okay, you don't know exactly where the trend is going to end, so the trend can just make small move, then it will continue. Okay, unlike as you are following the trend, you know that the trend is going to move up. Okay, and when it comes to trading against the trend, when it comes to taking a correction or a pullback entries, normally what happens is what, the market doesn't move smoothly, the market doesn't ride very well. Okay, it does, you don't normally get, as in that you don't get big pips. So you see this one like this one was just a pullback. You see how the market consolidated. Okay, but if you see the ones that are in according to the direction of the market, you see a very long ride, you see a very long ride. So let's move to the H4 time frame. I think with that one, so you see the pullbacks, you see how price consolidated, but when it comes to when the market is in the direction of the trend, you see how it is moving. It moves very smoothly, it moves very smoothly, but when it comes to pullbacks, you see the pullbacks doesn't last, just a minor one, then it will continue. But you see when it is in the direction of the trend, you see how the markets normally ride, you see how the markets normally ride. So that's how it mostly goes, that's how the market mostly moves. Okay, so at this point what you would do is what, wait for the pullback, for price to come to this side. If you are fortunate and price gives you pullbacks and give you a support in the middle of the range, that is fine. But this is the level I would love to on this level, then I will go in for a buy. Okay, but I'm not interested in a sell at this point. I'm not interested in a sell at this point. I'm not interested in a sell. So this is what I'll be expecting on gold. I'm not going to be what fighting the market, because where price has gotten to now, it is easily for price to just pull back, make a deep a deep sell. Okay, the price now, and you have to buy when price is very high. You have I'm explaining this thing, especially those who don't understand the technical aspect. Okay, so let me give you an example with the currently when Trump was elected. Trump was elected, there was this meme coin on Trump coin. You have something called Trump coin. A lot of people, the moment a lot of people heard Trump coin is there was this coin that is making the waivers in Trump coin. A lot of people bought over here. Some people even bought over here. And you see now where price has got into now. You have just lost your investment. You have not lost totally, since you have not even do this thing, withdrawn from the market. But you see, you have lost a huge percentage of what the amount you invested. You get it? So you need to understand the technical aspect. You don't have to be buying when price has reached very high level. It's the same thing that is happening on gold. I know a lot of people are just going to fight the market this morning. You can't beat the market. Just wait for price to come to you. Price is currently in the middle of the range. Price is currently at the top. Price has gotten to the top. Okay, so what I will advise you to be doing is what, wait for price to pull back. Okay, wait for price to pull back, give you a discounted price, buy at a very low price. The fundamental principle when it comes to trading is what, we buy low and we sell high. So when price is at a very high price, and as I said, you are going to be able to determine if price is very high, you are going to use the levels. Okay, so currently price is at a very high price. If in case maybe there was the level is at this point, price would have been very low price. Okay, by looking at the distance from this level to this level, I will consider price to be very high price. So you don't have to buy at this point. Wait for price to get discounted, then you take a buy. So this is what I will be looking for on gold this morning or for the day. Okay, so let's move to the major currency pairs. So first of all, let's look at GBP USD. So I'm saying you might be doing this, what do you call it, analyzing all the majors, but I don't think I will have the strength. I don't think I will have the strength to go through all the majors. So let's see. Let's see GBP USD. So let's make it fast. So in case maybe you're having any question, in case maybe you have question for me to address, what you have to do is what you just put it in the chat box, comment in the chat box. Okay, comment in the chat box and I will answer your question. So we are done with gold, we are done with the metal, we are done with the so let's move to the major currency pairs and see what's happening. Let's see if you are going to be having a trade for the week. So when it comes to the major currency pair, so this is GBP USD. So moving to the monthly time frame on GBP USD, this is the current market price. So after identifying the current market price, you need to make sure you are pointing out the levels that are close to the current market price. So this is the key. If you want to see the current price, the hidden line gives you the current market price. So you can see the hidden line over here. So tracing it to this level, this is the current market price for the quote currency. So with £1, you are going to get it at this price, 1.24077. Okay, 1.24077. So the monthly time frame, we're having this rejectional level over here. We're having this rejectional levels over here. Okay, so these are the various rejectional levels. Moving to the weekly time frame. So with the weekly time frame, so what you are going to do is what I plot out the various rejectional level. And one thing you need to understand is what the levels that I plot on the chart is not random levels. It is well calculated. Okay, it is well calculated based on the knowledge on the market structure. Okay, so as price has moved, this point to become the level. There was a rejectional level 2 over here. So since this is the monthly time frame and this is what the weekly time frame, I think I can adjust it over here. Okay, so if price is moving down, this is the level that price is going to get rejected on. Mostly you are going to see reaction. So price is either going to break out or what it's either going to pull back over here. So let's see, let's bring this one close to this level 2. So moving to the daily time frame, so this is the time frame you mostly consider the trend. So considering the trend over here, you can see it clearly that the market is what an uptrend. Using the skeletal frame of the market broke out over here. The market is what an uptrend. This is the point the market shifted trend. Okay, it shifted trend when it broke over here. When it made lower low, the moment it broke this one, it has broken the low, it has made lower low, currently made higher high, just pull back, made higher low, high, shifted to what an uptrend to as well. Okay, so when it shifted to an uptrend, the moment the market made higher high, so it's still what an uptrend at this point. The market is still what an uptrend at this point. So this is the level price is going to get rejected on. Price is going to get rejected on at this level. Price is going to get rejected on this level. Okay, so let's move to the H4 time frame. So if you move to the H4 time frame, you notice, so now the daily time frame, let's have it in mind, the daily time frame. So this analysis that we are doing can play out for the whole of the week. Okay, especially when it comes to identifying the daily trend and those stuff. So I'm very sure, since you don't have high impact news, the chances that maybe the daily time frame can maintain the whole of the week is very high. So the trend for the daily time frame is what an uptrend at this point. So let's move to the H4 time frame. So the daily time frame. So the daily time frame trend is what? So the daily time frame trend is an uptrend. What's the H4 time frame trend? So H4 time frame trend. So who can tell me the H4 time frame trend in the chat box? You can tell me. You can just point it out by answering it in the chat box. What's the H4 time frame trend? Who can tell me? Waiting for you guys. What's the H4 time frame trend at this point? Who can tell me the H4 time frame? By reading the structure, what's the H4 time frame trend currently? Chat, I want to hear from you. What's the H4 time frame currently? I want someone to answer in the chat box. What's the H4 time frame trend currently? What's the H4 time frame trend? A downtrend. All right. A downtrend. All right. So those who are part of my private group are answering. Okay. So it's a downtrend. Yeah, it's a downtrend. So this is how it goes. Let's see. The market was a downtrend over here. So anytime you are reading the chart, you need to look. You need to. So this is the current price. If you are reading the chart, you can either start from this side, start from left to right. Okay. So the market was a downtrend over here. Okay, because it made higher high. The moment it broke the higher low, it turned towards a downtrend. Just broke, made a pullback. So at this point, the trend shifted to what? The market made a pullback, just made lower low. So the moment it broke this one, it has what? Made a higher high. So if you want to see it well, change it to the skeletal frame. So you can convert it to the frame of the candle. So this is how it goes. So at this point, the trend is what? This is the point the market shifted the trend. When the market got to this side, the trend was still a downtrend. Okay, it was still a downtrend over here. But the moment it broke out over here and closed, when the candle broke and closed over above this one, the trend shifted towards an uptrend. It just made a pullback over here. The uptrend continued higher high. So at this point, the trend is what? At this point, the trend is an uptrend at this point. Okay, when the market was at this point, the trend was, when the market was at this point, the market was an uptrend. So the market is going to shift trend when it breaks this one and break and close this one, because it has already made a higher high. So if it breaks this one and close, the candle breaks and close this one, the trend now shifts towards a downtrend. So let's see how it goes. So when it's closed like this, okay, you see the candle has now closed below this one. So the moment it's closed like this, it becomes what? This one became what? A downtrend. So now at this point, the trend became what? A downtrend. So let's see how it goes. So it's still what? A downtrend. It is making lower lows, lower high, lower low. It's making lower lows and lower high, lower low, lower high, low, lower low, lower high. Let me use it this one. Lower low, lower high. It's made low because this lower high is what? Lower than this one. So this one made what? Low. We have what? Higher high over lower high over here. We having lower low. Okay, so at this point the trend became what? A downtrend. So we notice that the daily time frame is what? The daily time frame is an uptrend. Now H4 time frame too is what? A downtrend. So you see they are not in line, they are not matching. Okay, so since they are not matching, you can still focus on the H4 time frame trend, okay, to be taking a trade. But one thing you need to understand is what? When it comes to the chances of it playing out, the daily time frame, when both of them are in the same direction, it mostly plays out majority of the times than when the H4 alone. So mostly I focus on the H4 and the daily, not on H1. When I'm focusing on structure, when I'm focusing on the directional bias, I don't use the H1 time frame. Okay, I use the H4 and the daily time frame. But when it comes to trade execution, when it comes to finding a trade, I can go to the H1 time frame or the M30 time frame when it comes to like entries. Okay, maybe if sometimes the H4 time frame can give me an entry. Okay, sometimes even the daily time frame. So with the last trade I took, for instance, it was the daily time frame that gave me an entry. With this trade that I took over here, okay, with this trade that I took over here, right, the candles were like this one. So if you move to the H4 time frame, okay, so I waited for the trend to shift, and I even pointed it out that I want a breakout. So the entry was taken when the next candle flipped over here, when the next candle broke above this one. So I waited for the pullback. When the next candle broke above this one, that's when I took the sell. So this is how it went. So since I was relying on the daily time frame, so this is how it went. Oh, it just moved very fast because of the daily time frame. So I waited for, let's say, the H4 time frame. Let's move to the H4 time frame. So I waited for the H4 time frame to pull back. So this is the pullback. Okay, so the moment this one flipped like this, then I took the sell. So I took the sell over here. So this is the point I took the sell. You get it? This is the point I took the sell. So sometimes the daily time frame can give you an entry, the H4 time frame too can give you an entry as well. So mostly I rely on what, either the daily, if the daily time frame give me an entry, give me a setup and entry, I take it over there. When the H4 time frame give me a setup and entry too, I take it over there. So sometimes if all this, and the last trade I took for last month I took like 3 trades, they were all wins. One was break even, that was the USD card, that if it even moved in my direction, but it later came into break even. So mostly the last month I took only 3 trades, so I took like 5, but card JPY was a break even, and GBP USD I closed it very fast, and yeah, USD card. So with the USD card, for instance, the trade I took on USD card, I took the entry on the 30 minutes. Okay, so it is based on the market condition that is going to trigger me to what, to move to like other time frames to find an entry. So this one, for instance, when price pulled back over here, when price pulls back over here, when price pulls back over here, okay, you see there was no entry, but price has gotten to a rejectional level at this point. I think if you move to the daily time frame, you will get to know the rejectional level well. So this was the rejectional level at the H4, the daily time frame. So when price got here, I noticed that price has gotten to a rejectional level. So since the H4, the daily time frame is not giving me an entry, H4 is not giving me an entry, I was moved to go to the lower time frames. So the lower time frame, you need to check the trend shift. So as I said, that's the same thing that I was explaining to you when we were on gold. So this one, for instance, I would love price to break. As price broke out, made a pullback, it's still what, an uptrend at the H4 time frame. So I can take an entry over here. So since the candle is what, above this one, this is the point I can take an entry. Maybe the flip. So let me check this. So this was around 5 a.m. This wasn't time for me to mostly execute. Okay, mostly I execute around 7. So let's see how it goes. So this, I think, so this, the candle was around this side, you get it. So this is where I executed. So when this candle formed, okay, when this candle formed, I moved to the 30-minute time frame. Okay, I moved to the 30-minute time frame. So I think this candle just made a pullback by taking me out. So not taking me out, when this candle, I took it when this one flipped. Okay, but the next entry was taken when this candle broke above this one. That's when I took the next trade. So this is how I took it. So when it broke this one, yeah, so I took it when it broke this one. So the next one flipping, okay, the next one flipping was the deal. So this is where I took it. You get it. So this was the second trade I took last month. Okay, the nice trade. So it got me 1 to 2 risk reward, and I just close the trade. Mostly I go in for 1 to 2 risks to reward. So the moment it got to the target, I close the trade. Okay, so as I'm saying, what I'm trying to, the examples that I've given, what I'm trying to conclude on is what sometimes it's based on the market condition. That is what is going to move you to move to the other time frames. So you need to understand all these things before you execute a trade. So moving to the H4 time frame on GBP USD. On GBP USD, it's currently, the structure is not clear on GBP USD. The structure is not clear on GBP USD. Okay, the daily time frame is a downtrend? The daily time frame is a downtrend. H4 time frame. Oh, sorry, this is USD card. So the daily time frame is an uptrend. H4 time frame is a downtrend at this point. You get it. H4 time frame is a downtrend. So this how H4 time frame is a downtrend. So at this point, it's be very hard. Okay, it's very hard because the best, if you are basing on the H4 time frame, then I think you need to wait for price to break above this one. But since the whole of this month I've not taken a trade, I'll rather wait for what a higher chances. I have to wait for 2 time frames to be in the same direction, because the whole of this month I've not executed. So my first trade needs to be a win, not a loss. Okay, because I've waited for long, so I have to be patient and continue waiting for what a high chances. So I would love the daily and H4 to be in the same direction. Daily is an uptrend, so either the daily will shift trend to what a downtrend or any of them. But I want them to be in the same direction. So mostly trend shifting starts from the lower time frame to the higher time frame. So since the daily time frame is an uptrend, I would love the H4 time frame to also shift trend to an uptrend, then wait for a pullback before I will execute a buy. So for now, I'm not interested in the sell on what GU. Okay, so if you are relying on the H4 time frame, then the advice I will give it to you is to wait for price to break out from this consolidation zone. Because if you look left, you can see there was no support and resistances over here, there was no key levels, there was no rejectional levels over here. So the chances that price can continue to fill the whole of this zone is very high. Okay, it's very, very high. So let's plot out the various zones that price is going to get rejected. So price can get rejected over here. You get it, price can get rejected over here. Looking to the weekly, there was no level. Monthly, there was no level. So if you get to the H4 time frame, this is what, if you are relying on the H4 as your directional bias, that's what maybe a counter trading against the daily time frame trend. This is what you have to do. You have to wait for price to break out from these consolidation zones, because you're having rejection over here. Okay, if you change it to a line chart, you can see the multiple rejection. So it tells you how strong the level is. So after price has broken out, wait for a pullback. Okay, wait for a pullback, then what, you enter a sell. I think the risk was the pip range. The pip range is like 62 pips, which is very enough. But for me, I'll wait for the daily and H4 to be in the same direction, which is a high probability trade setup for me. So this is what I will be going in for. Okay, so I will rather wait for a shift. Let them the daily and H4 be in the same direction. Let me see the same trend. Okay, let them I want them all to be in the same direction, the same trend, then I'll execute. So I'm not interested in this, so I'll wait for a shift in trend. At that trend, then I will execute a buy. Okay, so those who want to go in for relying on the H4 time frame, I think when price breakout, make a pullback, you can look for an entry either on H4 based on the time frame that is giving you an entry. Then you rely on that to pull the trigger. That's what I will advise you to go for. So let's move to USD card, the next best pair that I trade. So when you move to USD card, let's first of all identify the various rejectional levels. So identifying the various rejectional levels, we are having rejectional level over here. At the monthly time frame, we're having a rejectional level over here. At the monthly time frame. So moving to the weekly time frame, So as I said, if you're analyzing, this is the current market price. So if the trend is just recently, the market has been giving a lot of gaps. You have been seeing a lot of gaps in the market. Okay, you have been seeing a lot of gaps in the market. So the best way to go by when you are seeing the gaps, especially when there's gap like this, it becomes very difficult for you to know the various rejectional levels, for you to know the various levels. So what you can do is move to line chart, move it to a line chart so that you see the trend very well. So that you see the various trends very well, various key levels well. So if you change it to a line chart, so let's move to the daily time frame. So since the current market is approaching this level, the market is approaching this level. Okay, so we don't have any key level. So this is where price broke out. So price broke out from this side. Okay, price broke out from this side. So when it is pulling back, it is going to pull back on this level. Okay, or on this level. So you can see the pullback was just, it moved straight to this side. So now this trend, the whole of this one has been invalidated. Price has now pulled back over here. So when it is making a retracement, you are expecting a retracement on this level. Okay, or on this level. These are the various retracement levels. Okay, so let's move to the daily time frame as well. So currently, if you look at the weekly time frame, the nearest rejectional level, if price happens to pull back, price move up, the nearest rejectional level is on this level. This is the various rejectional or nearest levels. So moving to the daily time frame, with the daily time frame, price has currently pulled back over here. Okay, price has currently pulled back over here. You get it? So let's see whether the candle has closed. So the candle hasn't closed yet, so this level is not yet valid level. Okay, because the candle is still going, and one thing can happen is this one can just make a flip and it will just invalidate it. So this is just a minor pullback. Okay, it has created a gap over here, so the chances that price can just fill the gap is very high by pulling back. So the daily time frame, actually the daily time frame is a downtrend. You can see it very well. When it broke out from this side, just made a pullback. With the moment it broke this one, it made a pullback to this level, just made a pullback. Okay, so if you want to ask me, someone is asking me question on my WhatsApp status. So if you want to ask question, kindly drop it in the chat box. Okay, that's the place you have to ask questions. We are currently analyzing, so if you have any question, just type it in the chat box. You don't have to come to my WhatsApp and just ask me questions over there. So the chat box is meant for you to give the chat box is meant for you to give your feedbacks about what I'm doing. So if you have any question, you need to drop it in the chat box. Someone is asking, is trading gambling? I could hear you say bet high on them. Yeah, it's a bet. Even your life, you are betting. If you take a car, is it not a bet? What is the guarantee that when you talk about bet? So let's check the definition for bet. When you say bet, that means it's like a probability. Meaning of bet. Meaning of bet. Your life itself is a bet. Risk a sum of money or valued items against someone. Okay, so your life itself, if you take a car, you are just betting on your life. You have been hearing people dying by car accident, or you've been hearing people dying by car accident. You've been hearing people dying by eating and they've died. You've been hearing people like dying in different ways. So it's the same thing in trading too. You can lose, you can win. Okay, that's not guaranteed. Anything that is not guaranteed is what? Anything that is not guaranteed means you are betting, you are risking. You get it? So if I say bet, you are risking something that was not guaranteed in the returns. Your life, it is not guaranteed today is like you are going to live for the whole of today. What is that guaranteed? It is not, though. You don't have any 100% assurance. But what you are going to do is what you are going to take care of yourself. You are going to make sure if you are crossing the road, you check your left and right. You are going to make sure you are going to eat healthy. You are going to exercise. You are going to do things that is going to what keep you alive. It's the same thing in trading. Trading too, we are going to do our best to win the trade by making sure we keep our risks in check, making sure we analyze based on what our past, analyzing based on our history data we are having. Okay, it's the same thing in trading. Bet your life itself is a bet. You are risking something. When you move outside, you are risking. So you'll be hearing some people will just be standing at the roadside and they will just be smashed by a car. You get it? They will just be smashed by a car. When they were moving out, they thought they will be returning back. But what happened? They never returned. So it's the same thing in trading. When you are executing a trade, you hope that it is going to be a win. But you get it? There was but. The but is the risk side. It can be a loss or we can lose the trade. So you have to put every measures in place for us to play the game for long term. So check the definition. Anytime you are making a decision on anything, the internet is there for you. We are having YouTube, we are having ChatGTP, we are having Google, we are having a lot of AI tools that you can use to research. Okay, so some of the questions that especially the young ones, they don't want to research, they don't want to do anything, they don't research on anything that they are doing. You have to research any decision you are taking, anything that you want to do. Research about. If you want to trade, research about trading. Is it a profitable way? What does it mean? Research before you even involve yourself in. Okay, you're having a lot of tools. You don't have to consult anyone. ChatGTP is like a friend. You have to take ChatGTP as your friend. You can ask him any question that you want, anything that you want to do in life. He will give you an advice. Okay, so you can be doing all these things. These questions are basic for you to ask. Okay, so the daily time frame, these are the various levels price is going to get rejected on. So trading is a bet. It's the same thing as sporty bet. You risk anything you are risking is a bet. Okay, so the daily time frame is what? A downtrend. So let's move to the H4 time frame and see. So the H4 time frame, so today the trend is not all that smooth. So the daily time frame trend is also what? An uptrend. If you change it to a line chart, you see it very well. You notice that it is an uptrend, and daily is what? A downtrend. So what I will do is I will wait for a shift, the whole of this gap. So the chances that the whole of this gap is going to get filled is very high. So it's the same thing that happened last week too. The gap got filled. Okay, I have to learn how to trade gap. The gap got filled over here. So the chances that this week too, the whole of this one is going to fill is very high. Okay, since the daily time frame and the H4 time frame are inconsistent with each other, the chances that this one can just come over here and make a pullback and continue is very high. Okay, this gap can get filled. Let's move to the lower time frame. So this is very simple. If you want to trade a gap, okay, if you want to trade this gap, I think the best is wait for a candle to close below this one. If the candle close below this one, okay, if the candle close below this one, that means you are just targeting it at the lower time frame. If the candle close below this one, the chances that this one is going to get filled is very high. So this is the point you place, or this is the area you place your stop loss. So it's just a counter trend entry, but because you've seen it happening more often, okay, then you take advantage of the whole zone of this one. So let me check the pip range. A pip range is like 20 pips. Okay, so this is the best way I think you can trade the gap. So let's see last week the gap, how it got filled. So this is how the gap got filled. So you see exactly the moment the market shifted trend over here, the market broke over here, the gap got filled. Yeah, so it makes, so the best way is to change it to a line chart. Okay, if you change it to a line chart, it becomes very clear. So I think that's the best way. So but I'll be keeping an eye on this and see how the gap. So I have to, because of late the market has been opening with gaps. Okay, and mostly it gets filled. So I'll just be keeping an eye on this one and see how it's going to go. But what I would love to be waiting for, so the market has currently on the higher time frame, it has become very difficult from last week. From last week, the market has become very difficult to trade. So I'll wait for price to break out. Okay, I'll wait for the breakout from the zone to shift trend towards a downtrend before I would love to go in for what, a sell. That is what my strategy tells me. Okay, so one thing you need to understand is what someone when it comes to trading, we all see the market different. I'm sure someone is even selling, is in USD card sell now. Okay, the person is not wrong. That is what he has seen it happening in the market more often. That doesn't mean the person is wrong. Okay, so you need to trade something that has been giving you profitability. That is simple. That is trading. Trade something that has been giving you profitability for a very long time. Then you do the same thing, rinse and repeat. You repeat the same process day in and day out. You repeat the same process. So maybe you are not seeing positive results on that strategy. Okay, you check everything, you are doing everything right, and if the system is not giving you profitability, that is when you will decide to shift. But if you have been doing that and it is giving you profitability, why do you want to change it? Okay, everyone sees the market differently. Everyone sees the market differently. The trading system, ways of trading the market is not the same. Every trader is having its own style of trading, but at the end, what we need is, what is it making you money? Is it profitable strategy? Okay, is it profitable strategy? Is it making you money? That's the most important thing. So don't condemn any one strategy like this person is wrong, this person is right. No one is wrong or no one is right in the market, unless the market has proven you wrong, unless the market has invalidated our what setup. Other than that, no one is wrong, no one is right. Okay, so till the market proves you wrong before you what say you are wrong. Other than that, everyone is right, everyone is wrong. So you just have to bear that one in mind. So with my system, I'm waiting for price to just shift structure over here, pulls back before I'll take a sell. So the market is not aligned for this week. Okay, I think February hasn't, the first week of February, second week of February, a lot of, we are not getting a smooth, I'm not getting a smooth move, so I'm still studying. So let's see USD CHF. So USD CHF, moving to the daily time frame. So the daily time frame trend, so let me plot out the various levels and see. So looking to the daily time, the monthly time frame, these are the various levels that price can get rejected. So we're having a level over here, we're having a level over here, we're having a level to over here as well. So these are the various rejectional level. Looking at the weekly time frame, so let me plot out the various levels too as well. So this is the current market price. So we're having a level here, we're having a level here. Yeah, so let me push this one to the side. So the reason why I push it to this side is what, the market, before the market to move to that side, it's going to take long because this is weekly time frame. Okay, and the chances that price can get rejected on this level too is very high. So moving to the daily time frame, moving to the daily time frame, the daily time frame, we're having a rejectional level to over. So with the daily time frame, this is where it's got me confused last week. So it looks like the body of the candle has broken, it hasn't broken. I hope you can see it. It looks like it has broken, it hasn't broken. Okay, that's how it looks like. So the trend is kind of not clear. So anytime the trend is not clear to me, what I will normally do is what I have to see clarity. Okay, I don't have to force things to happen. I have to see clarity. How can someone identify entry points? So if you want to identify an entry point, so that's what I'm doing. The levels, you get it, the various levels. Then you let me finish and talk about it. So after price has broken out, it made a pullback over here. So let's see the H4 time frame. So you see, anytime price get to those levels, it is getting rejected as well. You get it, it is getting rejected as well. So you're having another level over here. Okay, you're having another level over here. So before I would take a trade on this one, I think I have to wait for a shift in trend. Okay, I'll have to wait for a shift in trend, then a pullback, then I'll take this sell. That's what I will go for, because the daily time frame looks like a downtrend. It looks like the body of the candle has broken below. Okay, so it looks like a downtrend. So this is what I'll go for. I'll wait for price to pull back, break out from this one, make a pullback, then I'll enter. Okay, then I'll enter. So basically this is what I'll go for. I'll wait for price to break out, make a pullback, then I'll enter. So the market is now forming. Okay, the market is currently now forming, aligning. So let's see how the week is going to go. So that's it for USD CHF currently. That's it. So where the trend is going to shift to an uptrend is at this point. Okay, so if the candle breaks above this one, if the daily candle breaks above this one, now the trend has shifted to what? The trend has shifted to an uptrend. So this will be the key level. Price is going to get rejected at the H4 time frame. So let's see if it happens the daily time frame close above this one, then tomorrow we can get a breakout, a pullback, then we enter a buy. That will be tomorrow. But for today, I'm waiting for this one to break out, make a pullback. The trend is not that clear to me. The daily time frame trend is not. It looks like it has broken, it has just retested, so I'm kind of confused on it. So last week there was a nice opportunity over here, but because of the NFP, I think everything just turned around negatively. There was a trade setup over here. Looking at the zone, it was very cool zone too as well. And looking at the risk to reward, then would have been like 1 to 2 risks to reward. But because of the NFP, that's why I even avoided that, because of the NFP. Yeah, so this is what I'll be expecting on USD CHF. This is what I'll be expecting on USD CHF. Okay, so looking at GJ, with GJ, so let me check out the various levels on GJ. So I'll wait for price to pull back on this level. Wait for price to pull back on this level. These are the various levels. Looking at the weekly time frame, so the weekly time frame is currently what? A downtrend. This is the rejectional level. Looking at the daily time frame, we're having a rejectional level over here. So looking at the H4 time frame, so the daily time frame is what? A downtrend as well. Okay, so these are the potential levels that price can get rejected. These are the levels that price can get rejected. So I'm hoping for price to get, when price gets here, let's move to the H4 time frame, since they are all in the same direction. So at this point, I'll be waiting for price. If price gets here, okay, if the H4 time frame close on this level, if it's close on this level, we can get a possible what, price getting here and reversing. Okay, because price just made an uptrend over here, just broke out. So this is what, a pullback. So this point will become the third wave, and when it happens, when it comes to the third wave, price normally moves very well. Okay, price normally moves very well. So I'll be waiting for price to what, continue the downtrend at this point. Okay, I would love price to continue the downtrend at this point. So unless the H4 time frame, unless the candle close around the side, okay, I will wait for the candle to close around the side. If the candle close around the side, then we're going for what? Then we're going for a sell. This is what, because the daily time frame is a downtrend, H4 weekly time frame is a downtrend, daily downtrend, H4 downtrend, all the time frames aside the lower time frames. So when the H4 time frame candle, the 10 o'clock candle close around the side, that is when you move to the H4 time frame to wait for H1 time frame to wait for a shift in trend. Okay, you wait for a shift in trend. So something like this, when it shifts trend to what, an uptrend, a downtrend rather. So when you see something like this, a shift in trend, then what, we're going for a sell. So there's person who said, how can someone identify an entry? So first, if you want to identify an entry, you need to first of all identify the level that you are trading on, the level that you are executing on. Okay, after identifying your levels, you need to make sure you are going to use candles. Okay, candle, we have candle confirmation. So before you identify an entry, the zone or the key level, the support and resistance levels, the support and resistance levels, there's what do you call it, candle confirmation, and maybe a shift in structure. Okay, a shift in structure. Okay, so mostly this is what I use, and zones too as well. Okay, zones comes as a result of what, the levels. So if price gets to the support level or a resistance level, I will just consider, oh, maybe I have to take an entry. Then I'll bring additional confluence, or maybe a trend line. So it can be support or resistance or a trend line. So when I'm about to execute, I consider trend line too as well. So I'll give you an example of a trend line entry. So when it comes to candle confirmation too, with a candle confirmation, it's either you are going to wait for the rejectional candles. So with the rejectional candles, it can be what, maybe buyer's exhaustion candle, seller's exhaustion candle, something like this. You can wait for buyer's exhaustion candle. Okay, you can wait for buyer's exhaustion candle or seller's exhaustion candle. Okay, depends on the position, the decision you are taking. If you are taking a buy or a sell, it depends on that. Okay, or you wait for a shift in structure. So this is what I'm waiting for. So mostly when it comes to the rejectional candles, I mostly wait for them at the H4 time frame or the daily time frame. So if you look at the last time trade that I was talking about, if you watch this one, you notice that there was what, a rejectional candle at this point. You get it? You notice that there was a rejectional candle at this point. So this is how you mostly enter the market. Okay, this is how you mostly check for what, an entry point, how to identify an entry point. So this is how you mostly identify the entry. So you see there was price formed what, at a resistance level over here. It is giving us a rejectional candle too as well. Okay, so this is something like an indecision candle. So this is also another what some people call it dodgy candle, but mostly I don't normally consider the names of the candle. What is important is what, the size of the candles, how the wicks are forming and those stuff. This is what mostly I consider. So looking at the wick, so I'm coming, let me take water. Okay, so as I was saying, looking at the wick, okay, if you are trying to determine an entry, you need to consider the wicks. You get it? You need to consider the wicks. So looking at this wicks, you will notice that what there was a rejectional candle. Looking at the size of the body of the candle, the size of the wicks and those stuffs, it tells you what this is a rejectional candle. And price has the candle mostly. You need to consider them on a level, not in the middle of a range. Consider them on a level. So if you watch this candle, you can see that it's formed at what a resistance level. You get it? It formed at a resistance level. So this is a rejectional level. Okay, this is a rejectional level over here. So the moment you see this one at a rejectional level, you notice that price is going to what it was then moving up. So you notice that price is going to what continue, it's going to what reverse by what selling. So you can identify your entry based on this candle. Okay, you can identify your entry based on this candle. So this is how mostly I consider this one entry. So this one, for instance, so price is currently approaching this rejectional level. Okay, so if it's approach this one, if you move to the H1 time frame, I'm going to look for what a shift in structure, because if you watch this trend, you notice that the trend is what a downtrend. Okay, the trend at this point is a downtrend. So before you take a sell, if H4 is not giving you an entry, you need to what move to what either M30 H1 time frame for a shift in trend. Okay, for a shift in trend, you wait for a shift in trend, okay, to an uptrend, then what you take a sell. So this is what I'll be looking for on GJ for today. Okay, so let me check the zones so price can get over here. So you need to wait for a shift in trend on GJ. Okay, because either on M30 time frame, we need to wait for price to shift trend to a downtrend before you're going for a sell, because the zone is strong. If you look at the zone is strong at the daily time frame and at the H4 time frame. So the zone is not that bad. So you have to wait for a shift in trend, then we're going for what a sell. So that's what I'll be waiting for. If it happens, so you are left with 1 hour 25 minutes for this one to close. So if it's close over here, okay, then you look for an entry confirmation. You don't, if price settle on this one, that is not the point you have to go and take a sell instantly. You need to wait for an entry. So as I said, the entry confirmation, either candles, either shift in structure at the lower time frames. You get it? These are the things that you are going to factor into consideration before you execute a sell. Yeah, so that's what I'll be expecting on GJ. Okay, so I would love price to come and hit on these levels, then what I'll look for what a sell. So far GJ will be the first pair you will be having an eye or look at, okay, for the day. GJ is what you are going to be, because this is the potential trade, because all the time frames are pointing down. So GJ is the pair that I'll be having a close look at. So moving to the daily time frame. Moving to the H4 time frame. Yeah, so all the time frames are pointing down. Okay, all the time frames. So this is a good trade setup. The daily time frame too, we're having a lot of zones that price. This zone, the whole of this zone needs to get filled. Okay, the whole of this zone needs to get filled. So GJ is the pair that for today we are going to be looking at. Okay, so when this one close over here, then it will move us towards the lower time frames. You will look for a shift in trend. We can't take a trade instantly. I would love to wait for price to shift, a market structure to shift. Okay, if it moves over here, maybe if I see something like this, I have to wait for price to shift to what, a downtrend, wait for a pullback before I'll enter what, a sell, because the risk reward tool will be looking good. The risk reward will be good. Yeah, so it can give you 1 to 2 risk reward. So if you move to the 30 minutes, yeah, so GJ is what you are going to be watching for today. Either it will play out today or what, tomorrow. It depends on the market condition. So GJ will be the number 1 pair I will be looking for. We'll be looking at close marking today. So let me check USD JPY. So USD JPY. So I have to give time for questions and answers too as well. So looking at USD JPY, there was a rejectional level over here. So weekly time frame, the weekly time frame is what? There's a rejectional level too as well over here at the weekly time frame. So the other one was the monthly time frame. There was a rejectional level too over here at the weekly time frame. So the weekly time frame, so these are the various rejectional level at the weekly time frame. Moving to the daily time frame. So the daily time frame is what's a downtrend. Okay, so if price is moving up, this is the level price is going to get rejected on. This is the level price is going to get rejected on. So moving to the H4 time frame. Okay, moving to the H4 time frame. So the daily time frame is what? A downtrend, and it is currently what? Pulling back. So you're expecting a pullback on this level. I'm expecting a pullback on this level. So if you move to the H4 time frame, H4 time frame looks like an uptrend. Okay, H4 time frame looks like an uptrend. Not it looks like, it is an uptrend. H4 time frame is an uptrend. Okay, so price is currently, so unless I see a shift in trend, okay, the H4 time frame shift in trend like this, you wait for a pullback, a discounted price, then we take a sell. That's what I'll be expecting on. Then we take a sell. So that's what I'll be expecting for it to happen on USD JPY. Okay, because the daily time frame is a downtrend and it is currently pulling back. It's just making a pullback. So if you move to the H4 time frame, what I'll be expecting H4 time frame to do is what? To also shift in trend, because it has already shifted to an uptrend. You can see the candle clearly what? Broke above this one. Okay, so this is how it was. This is how it was looking like. Okay, so the moment it broke this one, so let me take this one to out. So the trend was what? A downtrend at this point. It was a downtrend. So you can see this leg has been broken. So for a shift in trend, since the candle has already closed, for a shift in trend, since it is a downtrend, for it to shift in an uptrend, we need to see a breakout from this side. Okay, a breakout from this side. So if we change it to a line chart, okay, so a moment please. So as I'm saying, this was a downtrend. So when it breaks above this one, it shifts what? An uptrend. So this point, the moment the candle closes above this one, you can see it has broken above the zone. You get it? It has broken above the zone. So at this point, the trend has shifted to what? An uptrend. Okay, the trend has shifted to an uptrend. So for it to align with the daily time frame, we need to see what? A shift in trend to what? A downtrend as well. Okay, so this is how it goes. We need to see a shift in trend to what? We need to see a shift in trend to what? So it's currently what? Moving up. So I'm not interested in this buy. I'm not interested in a buy on USD JPY. What I'm interested in is what? A sell. So I have to wait for a shift in trend, price to move up, pull back over here before I'll go in for USD JPY. So Euro USD mostly moves the same as GBP USD. Okay, they normally moves the same direction. So it can be a guide for you too as well. In case maybe you're analyzing Euro USD, you can check GBP USD too as well, for it to be like mostly they moves together. They moves in the same direction. GBP USD and Euro USD moves in the same direction most often. So this is the various rejectional level. So you guys can, those in the private group, you guys can notice last week I was going in for what? A sell. I made an analysis in the group about the sell, and it played out, but because of the news it just made up and down before it moved in that direction. Okay, so moving to the daily time frame. So the daily time frame trend is what? So there was a rejectional level over here. So I think this is what, Danny, you get it confused. So when you change it to what? A line chart over here. Okay, you see, one thing you need to understand is what? Line chart is the body of the candle. Okay, line chart gives the body of the candle. So if the body of the candle close around this side, one thing you need to understand is what? This thing that you are seeing, you don't consider it. Okay, because if the market gives a body of a candle, the next that follows, the next part of the body of the the next part of the candle is what? Wicks. You get it? The next part of the body of the candle is wicks. Okay, so if this is where the body of the candle ended, I think this is where you are getting it confused. So this is where the body of the candle ended. So if the body of the candle has ended over here, you need to understand is what? Anything that follows, anything that comes down over here is just wick. So this candle that you are seeing over here, we don't consider, this is a clean zone. Okay, this is a clean zone. This candle that you are seeing, if you are around, I'm very sure you are. This candle that you are seeing here, we don't consider it. This is just a wick. This point, there's no, this is a clean zone over here. This is a clean zone over here. You get it? This is a clean zone. This is what you need to consider. So this is the level price is going to get rejected over here. Okay, so this is the zone. So one thing you need to understand is what? This is just a wick. Okay, I've now seen your problem. This is just a wick. Don't consider this candle, because when you brought out the candle chart, okay, when you brought out the line chart, okay, this is where the body of the candle ended. This is where the body of the candle ended. Okay, so it tells you the body of the candle ended over here, and if the body of the candle has ended over here, the rest is all wick. And now if you come to the chart and you see this one, this is what? A wick. You don't consider even this one. Okay, this candle is because of how the market was very volatile at then. That is why you are seeing this kind of this thing over here. Please hold on for me. Let me pick this call. Okay. So as I'm saying, can you hear me? I hope you can hear me. Can you people hear me? Okay, I think I can be heard. So as I'm saying, this is the body of the candle. Okay, because of the wick, so normally it gets confusing, especially when the market opens with gap. So when it forms, this is the body of the candle. Okay, this is the end of the body of the candle, because as I told you earlier, if I've joined the bootcamp before, I said the line chart normally gives us the body of the candle, the end, the various key levels gives us the end of what, the body where the markets open and where the markets close. Okay, it normally gives us the body of the candle. So if you are drawing your support and resistances after identifying the various levels, if the body of the candle ended over here, then this one is not considered. So this is a clean zone over here. Okay, so if you are drawing your next rejectional level, you come over here, you come over here. Okay, you come over here. So this point becomes your rejectional, this point becomes the zone you are going to what, trade within. You get it? This point becomes the zone. So that's why even last week, the analysis I did on Euro USD, I brought this thing over here. I brought the target around this side. Okay, I brought the target around this side. So this is how it's mostly goes. So you don't have to pay attention to this one. Just identify the levels. If you see clean zones and there was a candle after identifying the rejectional candle, after identifying the various rejectional levels, and you still, if you change it to a line chart and you see a candle over here, you need to understand this is just because of how volatile the market was. That is why. So mostly these candles are Sunday candles. So let's see 3rd February. You will notice that it was on Sunday. So 3rd, okay, 3rd was on Monday. Yeah, so it was on Monday, around Monday dawn. Okay, so let me check the time. Yeah, so this was the daily candle. Okay, this was the daily candle, but mostly it will be around the dawn. So this is where the gap also got filled. So you notice that it was Monday. So don't consider that. Okay, so let me check it when you move to the H4 time frame where it got filled. Okay, so you see this was the gap candle. So you see, if you come to the H4 time frame, you notice that this was a gap. Okay, this was a gap. So don't consider that. If you come to the market, always, if you bring out your various line charts and you see the various rejectional levels, after identifying the various rejectional levels and you change it to a candle chart, you come here and you are seeing candle. But if you move to line chart, it's like it's a ghost. You come here, you see, if you come to line chart, you see the zones over here. But if you turn it to a line chart, a candle chart, and you are seeing candles within, don't consider those candles. It's because of what, it will either be what, a gap candle. Okay, it will either be a gap candle. So with Euro USD, the daily time frame is a downtrend. H4 time frame is also what's a downtrend at this point. By the way, the zone is very small, so you need a stronger zone. Okay, mostly if you are buying and selling on daily, weekly, monthly zones, it's better than mostly the H4 time frame, unless maybe I see the support level to be strong. Okay, so we are always putting ourselves in a position where we can win, even though there was risks involved, but we always putting ourselves in a position where we are going to win. Okay, that's the best, or that's what you need to go for. You need to always put yourself in a position where you are going to win in the market. So price is going to pull back on this one. Price pulls back on this one. So what I'm expecting is what, if price pulls back on this one, I will not love to, because the zone is like 2030. It's enough to. So this will be the rejectional level 2 as well. But so I would love price to come to this level. So what's the zone? So the zone is like 22 pips. So if price come around this side, sorry, for Euro US, if price comes here, then you wait for what, a pullback like this. Okay, so that's it. This is what I'm waiting for on Euro USD. Yeah, so AUD USD, I'm sure it's ranging as usual. It is ranging. So of late, the market has been opening with various gaps. Yeah, so it's also ranging. The currency market has been ranging since. Yeah, so they are all ranging. So let's see gold. So gold is still trending up. So as I'm saying, the market is currently high. So you see this one has just made a pullback. Okay, it has made a pullback. Mostly this is how we normally add positions to trade. But one thing you need to understand is what this zone is not strong. Okay, it is a nice buy. Okay, it's a nice buy because price has just pulled back. But one thing you need to understand is what you need to consider your stop loss. This zone is not big. Okay, this zone is not order, it's not, this is not what I'm even trying to say. This zone is not strong. Okay, this zone is not strong, so you need to wait for price to give you a correct zone that is going to be very difficult for it to break in case it is coming down before you take a buy or a sell. Okay, so that's why I always say you wait for a stronger time frame zones like the H4 time frame before you take. But if you are taking a buy on this zone, the chances that price can come back, okay, price can come back is very high. So you need to wait for a pullback. Patiently wait. Price is in all-time high, so patiently wait for it to pull back. Okay, if price pulls back, then what? You enter a sell. A buy. Wait for price to be discounted before you enter a buy. Okay, so if you have any question, kindly drop it in the chat box. So GJ is a pair for the day. GJ is the pair for the day. This is the pair that we are looking at. So the H1 time frame candle, the H4 is going to close in the next 1 hour 5 minutes time. You are going to see the closure of the H4 candle. So if the H4 candle close, then maybe you wait for a shift in structure before you go in for a sell. Okay, before you go in for a sell. So that's it. So any question so far? Any questions so far? Yeah, so the market has become very tough these days for getting opportunities, but patient pace, we are still waiting. We are still waiting for the opportunities to come, for market to give us opportunity for us to execute. So you don't have to because you are not getting. So sometimes it becomes very tough, especially if you are not getting a trade based on the way you trade the market is not giving you a trade setups. It mostly becomes very challenging to because you feel like you are missing out a lot and other stuff. That's how the market moves. It's emotional game, so you're always going to feel tempted to do something against your rules, and when the moment you lose, then your eye clear. The moment you lose, then your eye clear, then you say, I should have waited for the right setups. You get it? So it's always good you wait for what you have seen before. I always recommend, the waiting that I'm talking about is when you know what exactly you are doing. But if you don't know what you are doing, what are you waiting at all for? Okay, so I always say you need to execute trades that you've seen it happening before. So wait for things that you've seen it happening before. Okay, so mostly this is what I mostly execute. I wait for the things that I've seen it in the market before, and I know by the end of the month, there's no way by the end of the month I'm not going to get a trade. It is impossible. By by the end of the month. So you need to measure, or you need to mostly what measure your this thing, your performance. Those who measure their performance on trade by trade basis, they measure their performance on every single trade. I don't recommend that. Don't measure your performance on trade by trade basis, on daily basis, weekly basis. That is not how it goes. Measure your performance on monthly basis. Okay, measure your performance on monthly basis. At the end of the month, what was your P&L like? That is the best way to go. Don't measure your performance on daily basis. That one is going to, because you are not going to, one thing you need to understand is what, not every week is going to be a winning week, not every day is going to be a winning day. Okay, so you give yourself time, at least for some, you give yourself time, like for at least within the month you're having 4 weeks, 20 days with 20 trading days for the month. So give yourself those chances. Okay, give yourself those chances. So up to those times, at least you are going to get a winning trade. You measure your performance based on the monthly time frames. You get it? You measure your performance based on the monthly time. You measure your performance based on the monthly period. At the end of the month, then you check your P&L. Oh, was it good? Was it bad? That's the best way to go. But if you measure your performance on daily, you are always going to get frustrated, and you are just going to complain. Trading does not work. The thing does not work for me, and other stuffs. Okay, but that is not how it goes. That is not how it goes. And especially, we have some people that they just find the account, very small accounts, and they want something to chop wachi, or they want they want something to use it to chop. With that one too, it's cool. That one too is cool. But you need to make sure your performance is measured on what, daily monthly basis. Okay, your performance is measured on monthly time basis. So let's see, on Tuesday there was no high impact news on lending session. Wednesday too. So I think the high impact news will be happening on the wow. So okay, let me check it well. So on Thursday, that is when we are going to be having, on Thursday you are going to be having GDP news, yeah, and CPI too on CHF. Those are the higher time frame. Those are the times that you are going to be. So this week is kind of clean when it comes to the lending session. This week will be clean when it comes to the lending session. So we keep on observing and see. We keep on observing. We keep on observing and see if there's going to be an opportunity for us. So the H1 time frame has closed. The H1 time frame has closed. Okay. So what I'll wait for on GG is I want the H4 time frame to at least get close to this side. Okay. Get close to the rejectional level. If it gets close to the rejectional level, then I will look for a shifting trend. Okay, then I will wait for a shifting trend before I will execute a buy. I will execute a sell. Okay, the H4 time frame should close around the side. Look for a shifting trend, then I will execute a sell. Yeah, so as I said on gold, so the 30-minute time frame has closed, created a support over here. But one thing you need to understand, this one, if it's supposed to be the H4 time frame, I would have just executed, look for a buy entry and execute. But when it comes to 30 minutes, this level, if your stop loss is around this level, it can easily get invalidated. Okay, it can easily get invalidated. This one looks good for a buy, but if you are relying on this zone, price can easily get rejected. Price can easily stop you out. So always, I would love to trade on zones like this, on the zones like this. Okay, these are the zones that I would love to trade on. zones like this, zones like this. These are the zones that I would love to trade on, not on weakest zones like this. Even though the 30 minutes time frame has given a support, okay, it has given a support, but these zones are not all that strong. So this one needs to pull back. It needs to pull back over here, then it will continue up. Then it will continue up on gold. Because if you look left, if you look at the higher time frame, you notice that if you look left, those clean zones to your left. Okay, no traffic to your left, but you don't know when price is going to pull back, because at this point price gold has gotten to the all-time high. So let me check BTC. The way gold is moving, I'm very sure BTC too is also moving. Okay, so BTC is still 97,000. Okay, so BTC is still 97,000. Yeah, so if gold is moving up, BTC too is also moving up. So they normally moves together because they are all safe havens. People normally prefer investing, as in moving their assets in those, moving their money to those classes, pushing their money to those asset classes like gold. And if they see the dollar is not strong anymore, that's where they push their money to. Okay, so that's why you are seeing them rise. And so they normally move together, gold and BTC and the stock market as well. So that's why you are seeing US 32 is also moving up. Okay, US 32 is also moving up. Yeah, so it was good. Yeah, so this is just a quick scalp. So it has moved like 14 pips. So it is easy to scalp gold, but one thing is it's mentally stressful. I can't be doing this scalping. I just want a correct move, then you tackle it. That's all. Okay, so if there's no question, my time is up. So it's very simple. The overall trend at the H4 time frame is an uptrend. So if this one has created a strong support over here, what are you expecting? Price to continue up. It's very simple. Okay, it's very simple to know. So that's why it's moving up. But when it comes to gold, expecting the risk to reward and those things, this one, it will just, you just have to wait for support levels. Okay, so if price, you move to the lower time frame like M30 H1, if price pulls back, creates a support, then you take the continuation. If price pulls back, creates a support, then you take the continuation. If price pull back, creates a support, then you take the continuation. It's simple as that. Wow, so the zone has been filled. The zone has been filled. The zone has been, so you see the same thing that happened over here. So this one created a support. What happened? The next one moved up. This one created a support over here. The next one moved up. So if you see clean zone, mostly you trade them on a clean zone. But one thing you need to understand, these levels are not stronger levels. So good can bless you. Wow. So you see our projection went through. So if you want some short pips, so this like so when you are scalping, forget about risk to reward. So this is like 26 pips. This is like 26 pips. So it can easily come down again. So you see, the mostly when it is trending up, that's when. So let's see where gold was trending heavily. So you see the same thing. It created a support, made a pullback, created a support, continue, created a support. Yeah. So this one, for instance, created a support. The trend continued. So it's as simple. Okay, it's very simple. All right, my time is up. See you. So on Thursday we are meeting. Okay, Thursday I'll come live again. So see you all on Thursday. If I've not liked the stream, kindly give a like. Also, you guys have done well. You guys have done well. All right. So see you. Wow. So gold is moving heavily. Gold is moving heavily. Okay. So see you all next week. See you all on Thursday. Bye.